Todd, welcome back.
Oh, it's good to be back, Tate.
Mate, budget done. Great to have Franzway back. Franzway Loans. I love your brand. I love your company. I love what you stand for.
Thank you.
We said we'd do post budget.
Yep.
The question is, has the Australian property game changed forever?
It's quite likely. There's some pretty big changes. There's some pretty big voices as well having their say. So I'm looking forward to seeing what you think about this. What do you reckon?
Mate, I'm excited. I actually always think that there's always, with change, there's always opportunity. And I think that the entrepreneurial side of me always looks at it that way, the old glass half full. Look, there's good and bad with the budget. We knew that they were going to come in looking to take some money from somewhere. I was surprised, to be honest, that the budget is still going to be in significant deficit and that we're not going to be even looking at trying to bring that back in line. I thought the whole purpose of a budget is to actually not overspend. I thought that was the plan. I don't know about your company, Todd, but do you spend more than what you bring in? I don't think that's a good business strategy.
We wouldn't be in business very long, would we?
No, but, look, I think the main thing is, right, I'm an entrepreneur, you're an entrepreneur, we've got our own businesses.
Yep.
Both been around a long time. I think the thing is, right, we're the ones that employ, create opportunities, create economic growth, create jobs, gives opportunities. Like I looked at the budget and I looked at their projections for wage growth at 3%. I mean, the cost of living is well in excess of 3%. I think if people are only going to be getting increases in their, and my staff are probably listening to this, but it's true, only at 3% increase in wages, I think it's going to be very tough for them over the next period.
Yeah, well, it can. It already is, right? So there's a lot of people on the cusp right now, I think, in everyday Australia. So, it's going to be an interesting few years. That's for sure.
So with that, obviously as business owners, we've got to have a plan in play to assist our teams to make sure that they're definitely staying above the, the cost of living index, but also too really enjoying their jobs and getting some good satisfaction out of that as well. So I think that's one thing that I really looked at because, inflation for me probably more concerns me for my kids and for my staff. Like I don't want to see them struggling unfairly out in the market either. That's a concern. And correct me if I'm wrong, a good segue there, it's about trying to help kids get into the property market and, how do we best perform that? And we sort of dodged the whole bullet of, I thought the goal was to build more houses and create more opportunity.
Yeah, so I think, when you look at it, and we'll probably dive into this whole budget thing a bit more detail, but the whole supply thing, that I think that's it doesn't matter, negative gearing, capital gains, there's this whole supply and demand thing that will continue until the supply issue is fixed. And I think that's what you're saying, right, is that we got a supply issue. How does that get fixed? And I think that the budget did somewhat go to try and fix that. I feel that there'll be some unintended consequences to it though. So, yeah. What do you think about this sole supply thing? Did it go far enough?
Yeah, it's a great question. And it didn't. Like we've got a big problem with housing, especially where we are on the Northern Rivers and the Southern Gold Coast corridor. Like that's probably one of the biggest bottlenecks right now. And look, I love the fact that, it's a beautiful green space on the Northern Rivers, but it's time to see some housing presented that allows more for expansion that's in, is still keeping in consideration the beautiful lifestyle that we all enjoy. But I think there's a lot of opportunity there at the moment that's being a little bit gridlocked by both, unfortunately, Shire and state. So that makes it hard, right? We need land. We're screaming for it, but we also need affordable housing. So I think the reality is, you're right, it doesn't matter what budgets are put in place, supply and demand. And it was an interesting one. Last night, a little sneaky, rentals prices will probably go up by about $2 a week. I mean, I did the quick math on that. That's $100 a year in rental increases. That's over 10% or around 10%. That's some pretty significant increase in rental cost of living, if that's true.
Yeah, and that'll be interesting what plays out there, right? I do feel like certain areas will have increased rental pressure. based on the outcomes of the government and the tax treatment and where investors may or may not move. That's a highly likely outcome in some areas. I think is an increase in rent for renters.
You manage a lot of investors in your portfolio, and as do I, of course, with my my rent roll as well. Yep. How do you feel your investors are going to react on the back of some of these tax reforms?
So I think most of the investors we deal with will be sticking to their plan, and because they are long-term investors, they're not buying to try and game the tax system. They're looking to create wealth for their family moving forward. So most that I've spoken to in the lead up have been it's fine. There was a few issues around it so long as it's grandfathered, right? They continue to get the benefits, which it seems that's the case. So so there's no panic. The phone has not been ringing off the hook with people saying, "Oh God, I need to sell." So I think it'll be business as usual for those with a long-term investment plan.
Yeah, interesting. And what do you feel about, obviously too, we've got new investors potentially coming to market. Obviously it's really geared now towards new property with extra incentives there, which are technically the incentives that were there for everyone before.
Yes.
But obviously the incentives for new, do you think that's going to sway, or do you feel that investors are savvy and they're just going to be more looking for that yield? How do you think it'll play out?
Okay, so I think there's going to be quite a number of investors that won't want to invest out in the growth corridors of capital cities. And I think that's what they're trying to push is new build or say new apartment complexes, right? Because that's a product a lot of investors don't want to play in. And the same, if you invest far out in the growth corridors or greenfield spaces, typically the growth takes a long time to basically catch up to, say, if you'd bought something in a ring suburb of a capital city, right? So I think investors will be hesitant to actually spend the money and go there. What's the return looks like? What's the rent out there? Who needs or wants to live there as well? Who are the tenants, right? So I feel that it's complex and it's really hard to try and predict because we've got millions of investors in the country. So that's my thoughts. Like, where are you at with where the investors are likely to move to?
It's a good question. Look, I think that for the taxes that are going to be no longer relevant, and obviously with negative gearing is probably the hot topic and how that's going to play out. I feel like if you understand how negative gearing works and the tax implications and all the rest of it, especially on a second-hand property, on a new property, claimable tax can be up around close to $20,000 on average, right? It's just a guide, and don't hold me to exact figures. Yeah, but like an older property, mate, what is it? 6, 8, 10 grand per annum, something like that, maybe. Just as a bit of like I said, we're just bouncing numbers today. Yep. But by the time you really look at that, I think investors look more deeply than just that. And to be honest, most investors, I think, that are savvy look at that as a bit of an extra lick of the ice cream. That's not their financial decision. Their financial decision, especially the articulate investors I'm dealing with, they're looking at yield. They're looking at growth corridors. They're looking at supply and demand. They're looking at the opportunity. And in the Northern Rivers, if you can get potentially and we're seeing it, 5+% yield. If the market slows a little bit, that could get even more attractive potentially. If these rent demand goes up, because maybe a few investors do sell, it's only putting more pressure on that supply and demand equation. But the elephant in the room, and it comes back to this, if you're not building the houses, then we've got a shortfall of about, what are they saying, 55,000 a year or thereabouts.
So far, something like that. Yeah.
And that's with hope that they're going to find and procure an extra $5,000 to $7,000 homes a year with these other things that they're now doing, which I think is all puff and smoke. But let's hope that they do. Yeah. We've still got 55,000 homes shortfall a year in Australia. So especially in our pocket where there's such a migration of people moving from the big cities and love where we live and all those sorts of things, I think it's business as usual. I think investors are drawn to our location for lifestyle, where they buy to invest and then relocate as a retirement plan. And I think people are pretty savvy. The yields are also attractive. So there's now buyers coming into the mix that go, hey, the yields are great. it's near an international airport. Hey, this place is God's, God's country. And even though I'm only buying it for investment, I can see the attraction here.
Yeah. And I have to agree. Obviously, I'm biased. Live in the same place. So, we see that too, right? People buying as an investment now their future place of residence. So because of where we live. So, so another one of the dynamics that we'll yet to see play out. But I agree too with what you said, that a lot of the investors is that the tax is the cream on top. That is not the pure reason that they invest, as much as I think it's made out that the greedy landlords are looking to play the tax game or whatever. Most are not. Like it's helpful.
You know what? I look at my rental portfolio and it's endemic of Australia, right? It's so relevant. 70% of my investors, actually be over that, it's probably closer to 90 to be honest. Like we have a lot of mum and dad investors.
Yeah.
They've worked really hard. They've bought a property. They've utilised that property quite often, and I'm sure you're hearing this a lot, to fund a purchase for the kids to get into the property market.
Yeah, that's exactly right. So, that's and
how ironic.
Yeah, yeah, that's right. So, helping them. Yeah, so.
And they're the people that, are most affected by some of these changes, right? Like 70% roughly or thereabouts of investors in Australia are mum and dad investors. They're not driving the Maseratis. They're not, they're mum and dads that have worked really hard. They bought their first home or second home, wherever they're at in that personal residence journey.
Yeah.
And they've gone, 35 to 45 is about the circa when they probably did the first property, or and if they've got a second one, great in terms of investment. Most of them, like I said, have got one. And if they're in that position, they've worked really hard to get there, and they're the ones that are nervous about cost of living going up and all these other things, but they're holding on for dear life because they're trying to make it a bit easier for their kids, because their kids can't raise the whole deposit any longer by themselves. And I'm sure you're hearing the same story.
Yeah. We and that's exactly right. We do help the kids. With mum and dad helping. We've spoken about that before. So, it's interesting watching it play out. And then now with the new rules, those that do manage to get into the market and, like you say, they get down the track, they've worked hard, they've got some equity, and it's like, I want an investment property like mum and dad got because that really helped me.
Yeah.
The rules have changed. That's not a thing anymore, So
it's a lot harder.
It's a lot harder. Yeah. It's harder for them. It's not that they can't. It'll just be difficult. They're playing to different rules than what helped mum and dad get ahead.
So what we're saying effectively is it's going to be our grandkids that are going to get the worst bite of the cherry on the tax reform potentially.
Oh, possibly. Yeah. It'll be interesting watching it all play out, and I guess it's one of those things, right? I thought about it a little bit, and it's the same game. We're still all in the same game, if you want to call it that. But the rules have changed, and the rules will continue to change or evolve like any other game, right? So I think there'll be little loopholes pop up, or ways that innovative people get not so much around things, because I don't think that's what people are trying to do, but they're trying to just maximise the circumstances. So.
I know Kerry Packer's a bit controversial, but he always said you should minimise your tax. No one wants to pay too much tax in Australia. I think that's always been a given. It doesn't matter who you are. And I think, minimising tax is important, right? Otherwise, we wouldn't lodge our taxes and everyone would get taxed the same and we'd all know where it's at, right? So the rules are there and like they said, the government was very clear on that directive. The tax incentives are there to encourage entrepreneurs to grow businesses and to do better, to create more jobs, to create more opportunity, to give opportunity for growth for people, whether they be employees or employers. That's supposed to be the message. So, I hope that they follow through with that, because that's the most important thing, like. I heard a podcast with Simon Beard from Culture Kings, and now he's got all these other businesses off that as well. He's doing incredibly well, and he's like, one of the key messages that I got from him was, that you should be giving more incentives out there to help people get further, and that creates more jobs, more economy, gives more kids a fair go at getting their property, right, buying property, and and it was good to hear some positive around businesses and new businesses and some entrepreneurial opportunity there. But I think you've got to be careful with these taxes too, that if you make it too hard for people to progress, and I think you had a story about that this morning with some people, like were you coming out of the surf or something as well? Do you want to share that?
Oh, yeah, we had because I think this budget thing has maybe missed the mark a little bit for that entrepreneurship thing or startup. And, I think there's some, bigger venture capital and initial startup businesses that are a bit concerned about it, but small business, right? So I was with a group of guys this morning, small business owners, every one of them. We're having a cup of coffee.
Was it a surf meeting, mate? Was it a board meeting?
It wasn't actually around surfing, but we did a bit of training. But nice. And a coffee and a catch up, and everyone self-employed, and they were questioning with the tax, the way that it's set up now, with setting up and running businesses, because you and I know, and every other business owner knows, what investment you put into these things, which we will now be taxed the same as if you're selling a property or shares when you sell the business. So we won't get that discount on when we look to exit at some point in the future, right? So then they're looking at then what drips out of the bottom now if you go and make the extra effort, put on more staff, employ more people, what drips down out of the bottom of that business? Is it worthwhile? Is it? And some of these guys have got pretty good businesses. And so
what's your interpretation on that with the existing businesses? Will that be grandfathered? How are they? It's a good question. They haven't really opened up the can of worms on that, have they?
No, I didn't see or hear anything around that, but everything has been pointed to sale of an asset, and a business is an asset that typically would have a capital gains tax apportioned to it when you sell it. So I don't know, and when does it depend on when you started it? Yeah. How does that look? So yeah, that's a whole nother thing that, in back of my mind I've thought about, but and I suppose other business people will have too. Yeah. So yeah.
There's always something, isn't there, with the government, a little hidden agenda.
Yeah, and again, like an unintended consequence, like, we're looking at property over here, and yeah, maybe the shares will be, subject to the same tax, but what about business people? And, and what ties into the small business people is there's millions of Australians, small business people, that have a trust structure in their business ownership. Yeah. So, and it's not necessarily because they're, again, looking to game the tax system. It's often got to do with succession planning, asset protection. So there's a whole host of reasons to run a trust. And now I think accountants and advisors are going to be very busy for the next year.
Do you know what I love? Do you know what I love though? I love the young ones coming through. Like we're here at Social Lab today, a bit of a plug out to those guys too. Yeah. I love the young ones, the entrepreneurship, the excitement, people having a crack like that. It feels like yesterday, mate. I was 23, just started real estate, bought my own business at 27, and I see the young ones now having that same crack that we did, right?
Yeah.
And that needs to be incentivised. That needs to be really promoted. There needs to be better opportunity, because they're the ones now running the show. They're the ones that are going to bring in the new wave of opportunity. And like, I look at Social Lab and, I love the boys here. And I remember when it was just the two of them and they were having a dig, and now, they're employing staff and they've got a very successful business, and it's got a very strong name in the real estate space on the Gold Coast and the Northern Rivers, right?
Yeah.
And I think to myself, there's other, young ones coming through, the next Social Lab coming through, right, with whatever business that is. They need to be given those opportunities. I can't emphasise that enough. And I think the government needs to think more about that. That's where the future of the country is, right?
Yeah, look, I agree 100%. And that's where the whole innovation comes from. And because like you say, they've got a whole lot of energy and great ideas and stuff. So I love hanging out with like younger business people. It's awesome. So I do think that that's a consideration for sure, because they're the future leaders and need to be given the credit they deserve. So it's not the top end of town that's just business, right? There's Absolutely. Millions of us small guys out there. So
But I think there's some great opportunities. I'm looking forward to our next podcast too. Let's talk about our next one, what some of those opportunities are. I'm really excited to share. I think there's some secrets to be able to utilise the changes to your benefit to get into the investment market. Look, let's stay tuned, hey?
Yep, sounds good. Look forward to it, Tate.
At Tate Brownlee Real Estate, we open the doors to your future.